welcome to Insights. I'm Eric. Thanks for joining us. We're going to do an open cocoa review. Normally, I would add these into the ongoing cocoa report, but I really just don't have the facilities to have a detailed discussion at this point. So we're going to keep this open. We're going to encourage people, hopefully it'll encourage people to take a look at the report, especially in a market that's really set itself up. It's been doing that for quite some time. Everybody who's playing the cocoa report expected a quick setup. That's just not how markets always work. Markets want to set up, but sometimes it takes a lot of time. It waits for all the components to be right. Daily, weekly, monthly trend have to be right. Energy builds have to be right. And I often talked about remaining patient, but this is patient in terms of waiting for the proper setup, which is the skill all by itself. And these are the things that we are talking about here inside the report. So the evolution of the trade, which is right here, is how it drives us, our discipline of focusing on cocoa. It's considering 4 phases. We have the nibble, flip, reset, and primary trend decline. Cocoa is working on a flip right now. It's having a hard time organizing. Some of it is mostly due to the energy build, and we're going to talk about that in a second. We have the primary trend down, the weekly is up, the daily is up. Now it's coming back down again, but we got to get this primary trend flip in order to generate a flip, which gets us interested. And we have to have it set up by the right energy build. So let's take a look at that quickly. We can see how cocoa's been stuck in a trading range for quite some time. It's indecisive up, it's indecisive down. Anyone who's made a call has struggled to make any profits, either bull or bear case. That's one of the things that we've been talking about is you just need to be patient. This is NIB. NIB is an exchange traded note. It's marked in with the continuous contract, futures contract. We meld it together over a longer term. We have it back into 1973. So the computer does understand a lot of the cycles. We're not really talking about the cycles. But the cycles are an important part of the evolution of the trade. They're in columns here. These columns here, they're white and shaded. This is the daily, weekly cycles. This is the price cycle. This is the time cycle. But it really doesn't come into play until any asset, in this particular case cocoa, goes into alignment. We're not in alignment yet, up or down, so there's not much here in order to focus on. When the cycles get extended, they go into 1, 2, standard, 3 standard deviation, and so on. It helps us time, take profits, ride the trend, so to speak. You can ride a primary trend as long as these cycles are below 2 and the trend stays up or down. But that's not really what's taking place yet. Head back to this tab. We can see in the reversals, the computer gets reversals here. These are synthetic gaps that the computer finds generated by supply and demand volume zones. They're difficult to find. Only a computer can find them. I pulled over the weekly for trading purposes. I plugged them in here. You can see prices on NIB is right at 29.72. It's between all these gaps up here and all these gaps down here. And really what it tells us, and the resistance gaps are painted red, support gaps are painted green. If we can jump above this, we're going to jump the creek, and you have to get above a 31 handle to do that. If we fall below 28, we're going to get in trouble, and we're going to fall below and find some new reversals down here. But as time passes, we're squeezing more and more to the right-hand side. It's increasing or decreasing volatility. We call this compression. I'm not going to talk about the cycle volatility right now. This is stuff we talk about in the reports, and I'll leave the report link for cocoa inside this post. So anyone who's interested in that can either join the conversation or follow along or look for another option. And it's more of a detailed strategy than just general reviews. Reviews only talk about setups in the evolution of the trade. When they happen, there's not much strategy involved, but it does allow you to get access to the matrix. So if we're going to push through to the right-hand side, increase compression, jump the creek, break the ice, we're going to decide what it's going to do in terms of energy. And this is where the problem is lying for cocoa in general. Energy was here and it was up here, and inside the reports we had talked about how these energy builds were not properly set up. They're really too high participation. Again, this is they did turn the market briefly, but the problem is that if the participation's wrong, it's not going to work. And as we say that we're failing again, and we failed numerous times. A couple of the good bullish energy builds are marked by these green cups, and you can see how they turn the market for longer duration moves. Here, 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 but we just don't have one yet. And now the energy build is at -68 and -8, and that's not really a proper setup for a bullish breakout. It's releasing this bullish energy build, but now we're starting to create what you call blocking domes, or in reality, a setup that's not favorable for jumping the creek above this resistance zone. This is more of something that I'd be concerned if you're bullish to take some profits rather than to jump on board. We've got to get DI and DI2 up over in here. Where do you get this in the matrix? That's these numbers right here, 75 -68 and -8. DI is bound between 100 and -100. -100 is bearish maximum, 100 is bullish maximum, and you can see we're heading too much on the bearish side. And when it turns bullish at some point, we have to get this energy build set up properly. So we got to get these numbers up here, and this number has to come down a bit. And that's something that we're still watching, and that's why energy remains a patience play, and that's why cocoa in general has been stuck like this, because the energy build hasn't been proper in order to either break the ice or jump the creek. Break the ice upwards, jump the creek upwards, or break the ice downwards. Cocoa stuck in a trading range. That all happens when everything is out of gear. The one thing that we're starting to notice that is a leading attribute of energy, it's a different type of energy, is inside the pro charts. It's in column BM under cocoa. You click that link here, and you're going to get a chart that looks like this. And this is the price of cocoa that we've seen stuck in the trading range. This is the Pro Index, and this is the public index. And the one thing that we're starting to notice is that the Pro Index, which is smart money, and public index, which is dumb money, we want to follow what smart money is doing. Smart money is starting to pick up and buy here. It's made a low right about here. We're not really pushing down and breaking to new lows, and we're trending higher. We can take out the swing high right here and start trending higher in advance of a price move, while the public is either flat or starts to sell off. This is an indication that smart money is starting to buy. This is what's necessary a lot of times to turn the DIs higher or set them up properly. So it is something that we can keep an eye on. It's a longer duration type of setup where you have to watch it for it to be properly. There's going to be bullish and bearish divergences. The Pro Index can trend higher while price doesn't. That's a bullish divergence, but that can last for weeks or even months. Those are a good thing because it helps us tell us that there's someone who wants in and the proper money wants in, while the majority, which is too busy picking their toes to realize what's going on, keeps selling. Those are all good indication that a market's ready to turn. So right now, this market is really out of gear. It's not in alignment. The seasonality here is still relatively strong, but it's not going to go anywhere until the 3 time frames fall into gear and energy properly sets up. So that's really the basis. Now, reports go into a lot more detail than this. We study energy in a complex manner. We can find out whether the energy build is powerful, whether it's weak, and whether or not it's a quiet market, and then we can look at the longer term cycles. But this is stuff that you can learn how to read inside studying general reviews or inside the matrix. When this changes phases and goes to a flip and the energy build is properly set up, and stuff we do talk about inside the reports for sure. This is stuff that you can read simultaneously when you download the matrix. This is the full matrix, except I blocked out all the rest of the assets so we could easily talk about cocoa. So this is stuff you can do, and this is how it works, and this is how cocoa stands. Cocoa remains a patience play. It's been like that for about 6 months, maybe even a little more, and I can't think it's going to go anywhere until the setup is proper. And we'll talk about that when it comes. If you have any questions, let us know. If not, thanks for watching the video and enjoy your trading day.